Welcome back. Well, the markets are holding more or less flattish with the mild positive bias, but there's one stock, Ratnamani Metals, which has been a big outperformer. You look at the last 1 year chart, you look at the last 1 month chart as well. The stock is at a fresh 52-week high, and the numbers have been looking very good. One could argue that maybe valuation-wise, it's not very cheap. But in the last 1 month, even post those numbers, the stock is up close to around 30%. To understand what's going on and what's the way ahead, we're joined by Manoj Sanghvi, who's the business unit head of the company. Hi, Manoj. Morning. Thanks so much for joining in. Well, Manoj, your performance has been very good, particularly in the first half of this year. So at the halfway mark, you've done roughly around 2,300 crores of revenues. Where do you end the year with in terms of revenues? Point number one. And point number two is you've consistently been saying that margins will be mid-teens, but you've consistently been beating those margins as well. Do you want to up the range from that 15-16% that you normally talk about to maybe 18-20%?
Yeah, morning, and thank you for having me. So, first of all, we've done, as you said, we've done 2,300 crores. Last year, we did close to 4,400 crores. This year, we have targeted to do close to between 4,800 and 5,000 crores. So, we see a growth of roughly 10% on the revenues. If we speak on the margins, first 2 quarters, definitely we've outdone what we had budgeted, mainly because of the product mix, what we had in the first 2 quarters. But going forward, we might see some more orders from the carbon steel water pipe segment. So definitely what we had given earlier, we would do better than that. So now what I suggest is we could achieve the higher teen EBITDA numbers going forward.
So what, from 16%, what do you think you can reset that to?
So anywhere between 16 to 18%, definitely we'll try 18 or even more.
Okay. All right. Manoj, then give us a few more details. The stainless steel tubes, that's the one that obviously drives the business. So as a percentage of this revenue of, say, 4,800 to 5,000 crores, how much can it contribute for this year? Can it contribute around 25-30%? What has it been contributing? What will it contribute?
So in the past, if we see, stainless steel stands between 30 to 40%. But going forward with the expansion in the LSAW as well as what we have in extrusion, we aim to achieve somewhere close to 30%. And this year in our budget also we have budgeted 30% of 5,000 crores.
Manoj, you mentioned you're expecting some more orders from the carbon steel business going forward. So what is the updated order book currently? Firstly, good morning. Thank you for joining in. What is the updated order book currently? And export orders, as you said, remained at around 20%. Can we see a greater share of export orders from the rest of the year? And what are you expecting the order book to be in the last 4 or 5 months that are left for FY24?
So as on 1st November, our order book was close to 2,950 crores. Of that, 600 crores is exports. Historically, if we see, we are close to 20% of our revenues is from the export market. This year also, we target to be close to that 20% mark. But in absolute terms, definitely, being the revenue higher, the absolute number may be much higher than the previous year.
And what is the carbon steel, stainless steel breakup, if you can tell us that?
Exports, it is project specific. Sometimes stainless steel is more, sometimes depending on what projects. So this year maybe 50-50.
Okay, and for the entire order book, 2,950 crores, what is the breakup between CS and SS?
Roughly 25 to 30% is stainless steel, balance is carbon steel.
Got it. Okay, all right. You had commissioned a new unit, the hot extrusion plant. Could you tell us what is the current capacity utilization levels? What kind of annual revenue run rate are you going at, and where do you see that headed to?
Okay, so if we see all the products, our capacity utilization is close to 60%. Some products may be close to 80, some may be around 50%. Specifically to the extrusion, we are right now between 35 to 40% utilization. the ramp up is as expected, what we had expected. We have already extruded 10-inch pipe, which is first time in the India by any private manufacturer. And we have done grades which nobody in India does, like high nickel alloy grades.
Manoj, my next question is in two parts. For Ravi Technoforge in FY24, what is the revenue growth that you are anticipating for the full year? That is one. And the second bit is you already have a majority stake in that unit. When do you expect to acquire the remainder stake, and at what valuation, if you can tell us that?
Okay, so to answer the first part, last year we did 240 crores at Ravi Technoforge. This year we are seeing, we will see a 10% growth, roughly between two.
I
Oopsie.
seem to have lost the line there with...
Okay, all right. Hopefully we can reconnect with him. But for the time being, we have quite a few of those numbers. For the year, they're looking at 4,800 to around 5,000 crores. The export market is close to around 20% of their total business. And stainless steel, I think, will contribute close to around 30%. Manoj is back with us. Manoj, you were answering that query on Ravi Technoforge. It's 250 crores last year. This year, how much will it do and what margins?
So 10% growth is what we can expect this year, between 270 to 280 crores. Margins would more or less remain flat in low teens. We are doing a lot of things at Ravi Techno. So from next year onwards, we'll see margins improving.
Guiding that margins, by 2025 could move to mid-teens, I think 14 to 16%, which was what your normal business is doing. Do you think by 2025 that will happen? And also, I think the plan was to scale the business to around 500 crores. When does that happen?
Yes, so next year we will see the margins going to mid-teens and 500 crores 2 to 3 years down the line.
2 to 3 years. Final question, Manoj. I understand that, you buy your raw material for the stainless steel division from a third party, either from the export or the domestic market. But there are some plans that you have of setting up a stainless steel unit. Could you clarify?
We are working on various things. Definitely, within stainless steel, we have two segments. What we buy, one is the flat products, another the long products. The flat products, we have no plans, or neither we are pursuing any study on that. But on the long products, definitely we are studying that. At the moment, there is no decision yet, but we are working on it.
But there's a possibility that you can look to set up your own stainless steel long product division. Is that correct?
Yes, possibly in stages, but yes, we are thinking for it.
What could the rough capex be?
Anywhere between 500 to 700 crores if it is a full scale steel plant, stainless steel long product plant.
We'll look forward to hearing on that, Manoj. Always good speaking to you and getting your thoughts on the business as well as your ambitious plans going ahead. It's been a big value creator, but the outlook from here on is going to be quite interesting. So you seem to be touching the right points in terms of industry exposure. Thanks so much for joining in. Well, for the time being, we'll slip into a short break, come back, continue to focus on markets and on stocks.